There are now 59 weekly dividend ETFs, and there's more coming out every single month. Now, how exactly does an ETF pay out weekly, and what are my top 5 weekly dividend ETFs? We're going to go through all of that inside of this video. So first, let's quickly go over how exactly weekly dividends came to be, how exactly they can actually pay out so frequently, and why this is a thing. So of course, weekly dividend ETFs are a brand new concept. A lot of ETFs used to pay out monthly or quarterly, but because a lot of these ETFs utilize an options strategy, they are actually able to generate income more frequently than, say, a regular company or ETF. And as we scroll through the list, we can see they're either using option strategies like option income, or it's a fund of funds like YMAG, or even treasuries where we have WEEK, because treasuries accrue interest daily and is able to pay out on a weekly basis. So most of these strategies are going to use either some sort of leverage or option strategy overlay to generate weekly income. And the pros of weekly dividend ETFs is, of course, you're able to get your money faster. It's easier to plan, it's easier to budget, and of course, it's easier to reinvest immediately, whether it's back into the same stock or ETF or reinvesting it into another ETF or stock. And these style of ETFs are really good for people who really want to And these style of ETFs are really good for people who really want to live off of their option income, their dividend income. And it's a lot easier to visualize and budget if you're getting paid weekly. A lot of people have bills that are due every single week or bi-weekly, and weekly dividend ETFs is definitely going to help for a lot of people. Cons of these styles of ETFs is that it doesn't change the overall annualized yield. You're just getting your money a little bit more frequently, and it doesn't really change the fact that you're getting paid the same amount as if it were monthly or quarterly payouts. Let's go over our top 5 ETFs that are weekly paying, starting off with, of course, ULTY, which is the YieldMax Ultra Option Income Strategy ETF, and it has a distribution rate right around 80%. Now, a lot of people ended up buying this ETF at its highs in the mid $6, so they have lost a little bit of money in terms of capital decline, going from $6.40 to currently it's $5.50. But I've been holding this ETF for quite a while now, and I've actually made a positive total return even though the ETF has declined a little bit. Because if we take a look at the total returns, which means it's factoring in the share price as well as dividends reinvested, it's up 17, almost 18% year to date, which is absolutely amazing, and it's a very solid total return. If we take a look at the return since inception, because remember, this ETF underwent a strategy change in late 2024. Because prior to the change, it really did not do too well. It was a constant decline. We didn't see any progress during bull markets. And where this ETF really tested was during the March-April crash. And then we saw that it did have a pretty stable NAV during a bull market, which is not something that this ETF would have previously done with the older strategy. And back then, the older strategy was purely holding synthetics. Now they actually own the underlying shares, as well as buying protective puts to protect themselves from any downside, some harsh declines. Of course, buying those protective puts is going to eat into the dividend yield a little bit, and it used to be over 100% dividend yield, but now, because they're buying those protective puts, it's about an 80%, because it does eat into the option premiums a little bit. But overall, I'm pretty happy with this ETF. And if you bought into this ETF at $20 per share, right at inception, the all-time highs, even though the stock price is at $5.50, you're up a positive almost 19% total return if you're reinvesting those dividends. Now, if you're not reinvesting, you're probably looking closer to a 10% overall return if you're factoring in all those dividends received, because it's a little bit hard to see your total return on a lot of brokerages, You really have to calculate this all on your own. Go into your history, add up all the distributions that you're receiving from the ETF, and then factor in the share price decline. You're going to see you're actually coming out on top in most cases. Now, of course, if you bought right at the beginning of March and then you sold in April, you of course have lost probably a lot of money, but you do have to be patient with this ETF. A lot of stocks have dropped during this March-April timeline, so we do have to take it with a grain of salt, but it recovered quite nicely after the past few months, and I'm pretty happy with my total return. Now next we have NVII, which is the RexShares NVIDIA Growth and Income ETF. And I like this ETF quite a lot because, as its name implies, you're going to have that growth, that capital appreciation, as well as high income. Now, currently we have a distribution rate at around 74%, so it's a very respectable distribution rate. And the objective with this ETF is you're going to have half of it is going to be uncapped upside potential, and a lot of people really want that upside potential. Even though these are purely income funds, a lot of people have not been happy with the share price decline with ULTY, even though it's a pure income strategy ETF. So this is pretty much giving you the best of both worlds. You're getting the uncapped upside potential, and the other half is going to be weekly income via a covered call strategy to give you a nice blend and balance of growth in income. And we do want to note this fund is using leverage in order to amplify the returns just a little bit. So it's going to be between 105 and 150% of the underlying NVIDIA. And if we take a look at the share price, we can see it's up 28%, almost 29% since inception. Now, this is a fairly new ETF. It's only been out for a few months now, since May of 2025, but it's really performed quite well, and it's been paying out on a weekly basis, as well as this really good capital appreciation. And I'm usually not a huge fan of single stock ETFs, but I think this one is a really good one. I'm pretty bullish on NVIDIA, especially with this AI boom that we're in right now. And if we take a look at the total returns for NVII, it's up 47, almost 48% year to date, which is actually the total return for the past 4 months or so. So it's been averaging over 10% per month, which is absolutely insane because of that capital appreciation, as well as weekly income amplifying your total returns. And in fact, if we compare NVII to NVDA, it's actually outperforming the underlying quite a bit. We can see NVII is up 48% versus NVDA, which is up 39% since May 28, 2025. And this is one of the rare cases where one of these single stock ETFs, income focused, outperforms the underlying, which is absolutely amazing to see, and it's doing quite well. Now, our third stock on this list is going to be WPAY, the Weekly Pay Roundhill Universe ETF, basically a fund of funds of all of their weekly pay lineup, which is focused on growth and weekly income. Now, we do want to note that this utilizes swaps instead of options to generate its income, so it's a little bit different, it's a little bit tricky to understand, but overall it uses weekly distributions, so it's going to offer that recurring income for shareholders, as well as diversification, because it's going to contain the entire Roundhill Weekly Pay lineup, which is about 15 different single stock ETFs. And it's going to have rebalancing every single month to maintain that equal weight of all of the ETFs in this list. And we can see some of the holdings are going to be the Hood, Tesla, NVIDIA, Apple, AMD, Berkshire Hathaway, Microsoft, Palantir, Coinbase, and Broadcom. And we can see that the weightings have shifted a little bit, so we do have to wait for the next rebalancing. And this ETF offers a very high distribution rate of 85% based off of its last distribution, which was quite high actually at 88 cents per share compared to the two previous ones which were about 50 cents per share. And if we take a look at the share price, we're also seeing some pretty nice capital appreciation. It's up 6.11% in the past month. It's a very new ETF. It's only been out for a month now, since September 4th, 2025, but we're up 6% already, and that's not even factoring in the dividends that we've received. So far, there have been 3 payouts. So if we take a look at the total year-to-date return, now it does say it shows a 5% overall return, and I believe this is not counting the last distribution, so the next day it's probably going to update closer to 6% with that 88-cent distribution. But WPAY has been a great choice for a lot of people. I'm holding about 30 shares of this ETF, and I am up quite a bit because I bought in at around $51 per share. But of course, it's the new ETF. We don't know if future performance is going to mirror the past performance, so it is a little bit risky. But the good news is the WPAY management fee is actually waived to 0% until at least September 30th, 2026. So you have a full year of a normal management fee. Now, normally it's going to be 1.28%, which is actually about the same expense ratio as ULTY, but right now it's only 0.99%. So just 1% expense ratio, which is kind of high, but it's also not uncommon to have a high expense ratio because these are all actively managed ETFs. Now, this fund of funds is passively managed, as we can see here, but the underlyings are all actively managed and they all have a 1% expense ratio. And I believe we're not paying double the expense ratios because all of the underlyings themselves have a 1% expense ratio. If you are aware of how it works, let me know down in the comments if we're just paying that 1% expense ratio or we're paying about 2% because it's a layer of expenses on top of the underlyings. Now for our 4th weekly paying ETF, we're going to have YBTC, which is another Roundhill ETF, but it's going to be the Bitcoin covered call strategy ETF. There's not too many Bitcoin covered call strategies ETFs that pay out weekly, but YBTC is one of them. They have a pretty good track record, 47% distribution rate, and it pays out every single week. So of course you're going to get the income potential. It's going to generate that weekly income through covered calls on Bitcoin ETFs, and you're going to get exposure to Bitcoin. It's not going to be direct exposure. It's just going to be through those ETFs. And of course it's actively managed, so you are going to have a higher expense ratio of 0.96%. And as we can see in the holdings, that exposure to Bitcoin is going to be through IBIT, which is a ProShares Bitcoin ETF. And if we take a look at the share price of YBTC, we can see it's down 10%, almost 11% since inception. And this ETF has actually been out for quite some time now. It's been out since January of 2024, so almost 2 years now. So we have some history to go off of. We can see it's been a little bit volatile. It has its ups and its downs, but you are going to have some nice weekly income that it's going to generate. We can see year to date, it's up 23%. Absolutely amazing for a total return. And since inception, it's up 95%. So if you had bought this ETF right when it came out, February or January of 2024, you had almost have doubled your money in just a little under 2 years. So that's a really crazy high total return, and you're getting this paid out every single week. So it's going to be a very nice weekly cash flow for a lot of people. And if we take a look at the dividend history, as you mentioned earlier, it's going to be about 40% paid out weekly, but we can see the payouts, it does vary a little bit. The last one was about 41 cents. We have 39 cents, 38, 46, and it's been varying quite a bit. So you do have to keep that in mind, that all these distributions are going to change over time because it just depends on the volatility. Because with covered call strategies, the more volatile the underlying is, the higher the income it's going to generate. And there are periods in time where the underlying just isn't as volatile as it is right now. I know we've gone over 2 Roundhill ETFs already, but we do have a third, and this is going to be number 5, XDTE, the S&P 500 is 0 days to expiry covered call ETF. Now they do have QDTE and RDTE, which is the same 0 days to expiry covered call strategy, but on different indexes, which is going to be the NASDAQ 100 or the Russell 2000, whichever index you're comfortable on. These are all going to have the similar strategies. But for this purpose, we're going to choose XDTE. It has a distribution rate of 20%, and it's just going to be a lot bit more solid with the S&P 500 index. Now, QDTE is going to have a higher distribution rate because that indice is more volatile, but I like the stability of the S&P 500 index for this purpose. Now, if we take a look at YXDTE, weekly income, and it's going to be generating the income through covered call strategy on the S&P 500 index, and it's going to be selling 0 days to expiry options on the S&P 500. So it's not really going to hold any overnight options. You're not going to have that risk there. It's going to open and close those positions during the same day. In my opinion, that may be a little bit safer, but in return, you're going to have a little less option premium. And of course, actively managed ETF, because it's opening and closing those options contracts during the same day, 1% expense ratio or 0.97%. If we take a look at the chart, it is down negative 15%. And since the April crash, it hasn't recovered to its previous highs too well, but that is just because of the covered call strategy. You're going to have capped upside potential. So this is purely going to be an income ETF. You're not going to see too much in terms of capital appreciation, which I know a lot of you guys do not like these days. But this ETF has been out since March of 2024, so it has been out for some time now, and a year and a half. It has done quite well. If we take a look at the total returns, it's up almost 9% year to date, and overall return is going to be 26.61%, which is since March of 2024. But I like XDT. I've been holding it for a long time now, and with those dividends reinvested, you really can see how consistent it is. If we take a look at the dividend history, 29% dividend yield, and it's been paying between 20 cents, 30 cents. The last payment last week was 16%, so that was quite low, but it's been paying low $20 cents every single week. So there you have it, my list of my top 5 weekly dividend ETFs. We have 59 so far, with more coming out. Weekly dividend ETFs are the future. A lot of people love getting weekly payouts, and some ETFs even pay out 2 times a week. We have ULTY, which is the Defiance NASDAQ 100 Lightning Spread ETF, which pays out actually 2 times per week, which is absolutely insane to think about. We're getting an ETF that pays out twice weekly. And if you haven't seen that video already, you can click right here to watch that video review of QLDY. I think it's a great ETF. It's a really good concept, but it's very new, so we don't know what's going to happen. So let me know down below what weekly ETFs you have and how many shares you have of it.